The Forex market is the largest financial market in the world globally, where people trade to make profit. According to analysts and economists, over trillion of dollars is being traded every single day globally, and that is why both newbie and potential professional traders are always coming into the market to make profit. But the problem right now is some people are making profit while some people are losing their hard-earned money. So what differentiates successful traders and the unsuccessful one is the successful ones are making profit while the unsuccessful ones are losing money. So in this video, I want to help you to come out from being an unsuccessful trader to becoming a successful trader. So that is why I'm going to be sharing with you 7 ways to avoid losing money in the forex market. Once you are able to master these 7 ways, you will not be able to lose money again in the forex market. Rather, you will be receiving reward for your hard work. You will be reaping the fruits of your hard labor. So my advice for you guys is to make sure you watch this video from the beginning to the end and subscribe to this channel. Give us a like, turn on the notification icon to be notified whenever I publish new content. So number 1 thing you need to do to avoid losing money in the forex market is to do your homework. Before you venture into forex trading, you need to do your homework. You need to understand how the forex market works. First and foremost, you need to do what we call a basic study about the forex industry, how it works. You know fully well that the forex market is a financial industry where people buy and sell financial currency. So when you are entering into the forex market, you should do your homework to know what you are aiming at, to know the kind of pair that you are going to be trading, to know your money management rules. So you need to take out time to do a thorough homework about forex trading. Don't jump in because everyone is doing it and you just want to join in. You need to relax and do a homework. Ask yourself, is this a business that is going to give me profit? Is it a business that is going to make me a millionaire in the next 2 or 3 years? So try as much as possible to do your homework. That is the first thing you need to do before venturing into forex trading. After that, the number 2 thing you need to do is to find a reputable broker. Before you start trading, you need a broker. A broker is where the transaction is being made. So for you to trade forex, you need a good broker, because that is where the transaction will be made. That is where the buy and sell is going to be made. So finding a good reputable broker is very important, because there are so many fake brokers out there. Once you deposit your money, that money is gone. So you need to find a reputable broker that is regulated by top tier government. Brokers that are regulated by top tier government. So you must make sure you search for a reputable broker. I'm not going to list any for you, but you can search it on Google. Search it by yourself. Look for a broker that has a good track record, a broker that is well regulated, so that once you deposit your money, you are 100% sure that the money is secure. In case if you want to withdraw it, you withdraw your money without any excuse. So you must think of a good broker. You should also look at the spread. Some brokers have mad spread. Their spread are very, very bad. They have so much wide spread. So you look for brokers that have tight spread, right? You also look for brokers that doesn't charge commission, because these are the things that are going to drain your profit. So you look for brokers that their spread is very tight. You also look for broker that doesn't charge commission. There are some brokers out there that doesn't charge commission, because each time you place a trade, you'll be charged a commission for that particular trade, and these are the things that will be costing you money. So the profit you made, they will deduct the commission from it, and it will reduce your profit. So now it's good for you to look for broker that doesn't charge any commission, and also look for broker that their spread is very tight. And after that, you also look for a broker that is well regulated. Don't fall into scam. Don't go and register with a fake broker, and at the end of the day you start crying because you have just lost your deposit. So look for a reputable broker that is well regulated. So after getting a good broker, the number 3 thing you need to do is to use a practice account. A practice account is a simulated account where you can do your practice. In other words, we call it a demo account. So every broker has a demo account where you can practice your strategy. So first and foremost, before investing real money, you must make use of the demo account. The demo account will help you to know how the broker is, to know the pair that you want to trade, to know which pair has tight spread, to know which pair doesn't charge commission, to also practice your strategy. You also use it to backtest your strategy. So what the demo account does is it helps you to trade without using real money. So you can trade normal trade, but you are not trading with real money. Instead, you are trading with what? Simulated account. So the money you are trading with are fake, they are not real money. So that one will not build your psychology, it will not help your emotion, because what will help your emotion is real money, real trading. But what that will do is it will help you to build a trading plan, it will help you to build a trading strategy, and it will also help you to know the broker that you want to use, because it is through the demo that you know whether if this broker has a tight spread, or if this broker charges commission, and so on and so forth. And from there you can also know the pair that you can trade, the pair that you prefer. Like I always advise beginners traders, if you are starting as a trader, always focus on one pair, master it, and become an expert on that pair. So the demo account will help you to choose a particular pair that you are good at, and then focus all your attention on that pair. It will also help you to build a strategy that will help you in the long run. So after that, the 4th thing you need to do is to keep your chart clean. After that, the number 4 thing you need to do is to keep your chart clean. Some newbie traders make the mistake of putting so many indicators on their chart, combining so many indicators on their chart. This is not going to help you. Instead, it will cause you more confusion. So if you don't want to use price action, because for me, I think price action still remains the best. Once you master it, it still remains the best if you can be able to master price action, because with price action you don't need any indicator on your price chart. Everything is clean. All you need is just your eyesight for you to be able to identify patterns. So for me, I think price action still remains the best trading strategy if you truly want to become successful in this business. Price action, because price action tells you what the market is doing currently, right now, right? So with that, you don't need any indicator on your chart. But if you don't want to use price action, because traders differ, not everybody will be the same. Some traders like price action, while some prefer indicator. But if you want to use indicator, you don't want to use a price action, I would advise you to use at least 1 or 2 indicator. Don't use more than 1 or 2 indicator. For me, I prefer 1 indicator accompanied with price action, because I don't expect you to use only indicators, because indicators are lagging. They are lagging behind. So if you are trading, you must combine indicator with price action, right? So for me, I would advise you to pick 1 indicator and combine it with price action. It can be the moving average. So you can use the moving average indicator, combine it with what? Price action, and it will give you the best trading strategy. And if you don't want to use the moving indicator, you can use the RSI, combine it with price action, and to give you a good trading strategy. So the advice is, do not jam-pack your chart with too many indicators because it will confuse you more. So make sure your chart is clean and focus on the price action. Know what the market is doing currently and trade based on the market condition, because sometimes the market might be ranging, trending up or trending down. So you know that, like I say, indicators are lagging. Like moving average only works during a trending market. So if the market is ranging, you're going to get so many whipsaw, and this will make you to lose so much money. And if you are trading only with the RSI only works during a ranging market. But if the market is in a strong trend, the market can remain at the overbought or oversold condition for a very long time. So that is why I said price action still remains the best, because price action tells you what is happening. With price action, you can be able to adapt to the current market condition, the dynamics of the market, because with it you know if the market is ranging, trending up or trending down. That is what price action does for you. So you can combine it with just one indicator. So that is it, very important. Then the number 15 you need to do is protect your trading account. It's not just about making money. It's not just about profit. What about your capital? Can you protect your capital? Because if you don't have a capital, there is no way you can generate profit. So it is very important that you protect your capital by practicing sound money management. Like I said, money management still remains the best strategy in forex trading. Out of 100%, money management has over 95% for your success as a trader. Strategies like indicators or price action can only give you 5%, but money management and trading psychology will give you 95%. So ability to protect your capital is also important. So your stop loss is very important. Whenever you are trading, make sure you use stop loss. Stop loss will help you to get out of the market if the market goes against you at the early stage, and with that you can only lose small. But if you don't have stop loss, your losses are endless. You are going to lose so much that you can never imagine, and if care is not taken, you might blow your account in a minute of time. So your stop loss is very important. Some traders make the mistake of not even placing a stop loss in their trades. I don't know what they are hoping. Are they hoping for magic? So why stop loss is important is it protects you from being drained. It protects your account from being wiped out. So always put stop loss whenever you place a trade. Very, very important, because it will help to protect your account from being wiped out. Then the sixth thing you need to do is to start small when going live. So once you are ready to go live, once you're ready to start trading real money, it is advisable that you start with small money. Start small, because starting small will help your psychology. Like I say in forex trading, you have to risk what you can afford to lose. Don't risk what you can afford to lose. So that is why starting small is very important. So if you are going live, start with small money and trade with it. So if you keep trading and you're making profit, then with time you can start increasing your capital. But first and foremost, start small to develop a trading plan and a trading strategy, and also a trading psychology. Then with time, you will be increasing your capital till you get to millions, because there are some traders that have 1 million, 2 million, or even 10 million as their trading capital. But you don't need to start with that. You can start with $1,000 as your capital, right? And then you can now scale up with time to $1 million or even $10 million. But don't just start as a new trader with $1 million. Don't try it. Start with at least $1,000 as your trading capital, and then you can now grow from there. So trading psychology is very important, and what will help you is when you start with small money, it will help your trading psychology. The number 7 thing you need to do is to keep a good record of your trading. That is, in other words, we call it journaling. You have to journal your tradings, right? Every trade you take, you must journal it down, right? So that with time you come and look at it, reflect on your trades, know where you make mistake, and know how to improve. You look at your profit, you look at your losses. trading journal is very important. So each trade you place, you must journal it down, write it down. This is the trade I placed, this is the lot size that I took, this is my stop loss, this is my take profit. So with time, you come and look at your journal, look at your records to know where you are making a mistake. So if you are doing the same thing and you are not seeing any result, it is time for you to change and start doing something else, because you cannot be doing the same thing and expect to be successful. You need to adapt, you need to be dynamic, change when you are not seeing anything, and do something that will give you success. So keeping a record, a trading record, a good journal will help you to know what you are doing, to know whether if you are progressing or if you are stagnant. So that will help you to take a good decision earlier before it is too late. The last thing you need to do, in number 18 you need to do, is to treat your trading as a business, right? You know that business takes time to grow, so you should treat your trading as a business. Allow it to grow with time. Develop knowledge, read about trading, practice, gain more knowledge, treat it like a business. Don't try to make money instantly. Know that forex trading is a business of time. Some traders feel that if they don't make profit today, they will not rest, so they will be struggling to make profit, seeing trading as a competition. No, in trading, it's just a business. Today you can lose, tomorrow you can make profit. It is a business. So what matters is, at the end of the month, are you profitable or not? So it is the end of the month that you cannot do an accumulation of your success and your losses and then add it together, and from there you will be able to know whether if you are profitable at the end of the month or if you are not when you lose in a single day you will now start complaining, right? So you shouldn't be looking at a daily trade. What you should be looking at is the monthly. What is your achievement after the end of the month? So you need to take our time to understand that treating a trading career as a business is very important. You must nurture it. Take our time to grow it. We start from small and grow it with time. And when you do this, you'll be able to protect your capital from being wiped out. So once you are able to master these 7 steps that I've stipulated in this video, you'll be able to avoid losing money in the forex market. And once you stop losing money in the forex market, you start making money. You start being profitable in the forex market. So my advice for you guys is to rewind this video, rewatch it, so that you gain the facts of what this video is talking about. So that is all I have for you in today's video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this, and also don't forget to turn on the notification icon to be the first to be notified whenever I drop new content. I will see you again in my next update. Enjoy the rest of your day. Peace out.